Day 46, got him. Took the profit first day after we stopped taking entry signals, and it's an excellent win. $162.24 less $6.35 in the swap gives us $155.89 for the win. And do you know what? This has been a strong sell-off of the pound today, certainly at least against the franc, because we took profit at 1.24996, now all the way down at 1.24182. It's about another 70 or 80 pips that's run. And it makes us think again about the trailing stop loss and how many of these trades would have actually benefited from it. We'll have one last look through the charts and see how much we think trailing stop losses would have got us versus the ratio take profits that we were using. Might as well start on the pound Swiss franc. As I said, this one right now would have been nice, a strong move that's come down. Don't think it would have made a difference on these other two trades. You might have got a little bit more out of this one, but remember, it's not going to get you out of the very peak, the trailing stop loss. So the fact that this is only about 47, 48 pips, I don't think you would have got much more out of that one. And there was this insta close trade as well. That wouldn't have made a difference to any trailing stop loss. New Zealand dollar, Swiss franc. Again, these two trades, we had two winning trades on this currency pair. Don't know if trailing stop loss would have helped much on the first one. What are we looking at? It was about 80 pips. Yeah, you could get a little bit more out of that one. It does take a while before it actually retraces to a lower price. This latest one, it wouldn't have helped though. In fact, we would have probably made more from the ratio there. It does go a little bit higher than where we were stopped out, but it's really not a lot. Great British pound, Australian dollar. Trailing stop on this one is potential for it to be nice. To be honest, it completely depends on whether you get caught out in this retracement. That is 185 pips. So I think it's pretty likely that you get to a low around about here, but the trailing stop loss is within this range. And so in fact, you probably don't get more out of it. But if you have given yourself enough room to avoid that retracement, so far you'd be catching a very nice part of the move. Canadian dollar, Japanese yen. This definitely wouldn't have helped with the trading stop loss. We got out quite near the bottom. It was a bit of a snatch and grab of the profits there before a sustained reversal that we've seen since towards the end of September. This one's a good one for the ratio. Canadian dollar, Swiss franc. Yeah, trading stop loss might have got you a little bit more. Finished up there. It's about another 90 pips, so not a lot. Maybe some. Euro, Japanese yen. The trade and stop loss would have put some work in on this last trade. It only took one day for us to take profit, but there was another 5 or 6 green days on the bounce. And you'd probably trigger around about this area between these two red candles here. This particular one, much nicer with a trading stop loss. Euro, New Zealand dollar pair. It's another one that looked like a trading stop loss. Might have got you some more from our close there. It's about another 300 pips down. A lot of the time it just depends on whether these retracements get you or not. That high could get you potentially. Hard to know. A bit of a mix, but certainly some of those trades did look like they could have benefited from a trading stop loss. So if you did want to use the trading stop loss, or a mix of both with the ratio trades and the trading stop loss at play, they both look like they've got potential to work. One more time, let's check out in the journal and see how the strategy is done as a whole. Our final journal, here it is. Let's first go down to the bottom line. $815.82 profit in total. Starting balance was $4,932.29, and we closed it out at $5,748.11. That's about a 16.5% increase in 46 days. That's trading days, so just over 9 weeks, and we took 16 trades in that time. Pretty strong strategy. Don't know if it'll be able to extend this kind of run forever, but certainly from what we've seen, it's been quite consistent. Let's go back to the top and check out those starting trades. We hit a nice run to begin with. These first 4 trades, they're worth about $500. So if instead of getting $500 in profit, they were all losses for around about $100, that would be a $900 swing, which would put us at a profit. Just goes to show that there is potential for particularly bad runs to put you under. But having said that, even in that situation, you wouldn't be under by too much. And we did hit a bit of a poor run around here. This was mid-September time. And then it was a little bit damp for us. You can see 22nd of September a loss, 23rd, 28th. Definitely a weaker period at the end of September. But once October started, we got back to our winning ways. In terms of the amount of trades that we were losing and winning on, they were pretty similar. But as we had that 1.5 times ATR for our take profit, it meant that in this stage we were still accumulating a bit more money. Then finally in the second half of October, it really picked up. In the last 2 and a bit weeks there, 3 really strong winning trades and only 1.5 losers in response. It was a pretty well managed strategy. And there wasn't so many times where we had to close a trade because of a reverse signal. We did have that pound Swiss franc for 36.55, and we had to close this Australian dollar, New Zealand dollar manually. But that was for profit after the swaps. It wasn't that much profit, around about $15. But most of these trades were permitted by the rules to get to their conclusion of either a stop loss or a take profit. So we like that. A lot of the time you can find with certain indicators they can flip back and forth too quickly. But the MACD does seem to have a nice pace on it. Our moving average, it didn't really cause us any trouble either. 60 periods was quite nice, and a couple of these trades we were able to get wins on after the third histogram bar crossed over. So I think it was good to wait for that as well. Give it those couple days opportunity to catch up. You don't want to let it go too far, because at a certain point the move is just going to be finished. But both indicators served their purpose. And let's not forget the average true range, one indicator, amazingly helpful for measuring out risk through volatility, and it's done us good here. So we can all be very pleased with the results. That's it for the journal. Let's just give our final thoughts on the strategy. Final thoughts. First off, we can be pleased that above all else, the strategy was profitable. Decently profitable as well. It didn't just limp into profitability right at the very end. That's all we can hope for. And as you saw in the journal, the strategy generated a balance increase of approximately 16.5% over a period of 46 trading days. Those are quite strong numbers, so it is worth noting that over the course of a year or multiple years, it may not hold up to that standard if you were to hit a bad run or two over an extended period. Based off the results we've seen though, maybe it could. It was a decent number of trades that we took as well, 16 over those 46 days, so around about once every 3 days we would get a signal that we were able to take. It means that we are regularly getting entries, but not just throwing ourselves into any signals here, there and everywhere. Throughout the strategy, we did receive a lot more entry signals, but oftentimes we couldn't take those signals as we were already in a trade which involved one of the currencies from that newer signal. Following that process of not getting into multiple currency pairs involving the same currency will almost certainly save you money in the long run, as if you do enter say 5 trades all selling off the euro against other currencies, you could get rocked by a haymaker of a day and suddenly be fighting an uphill struggle to get back into profitability. Speaking of profitability though, we did take a deeper look at the end of the strategy to investigate whether we thought a trailing stop loss might prove better than the ratio-based profit that we were using. It remains a tough call as we saw some trades that would have made excellent use of a trailing stop loss and others where it would have botched out the trade. Something else that could be considered here is extending the ratio of the profit that you use. We applied a 1 to 1.5 times ATR ratio for more profits on a winning trade than losses on a losing trade. But you might want to push that even further and have that take profit level at 2 times the ATR value to try and squeeze out even more gains from it. That would have worked effectively on some of the trades that we took. Or, you could look at the profitability of the strategy as is and say to yourself that if it ain't broke, don't fix it. No reason theoretically though that you can't test all those different profit-taking styles just in case there is improvement to be had. So that is it from us on the MACD and EMA strategy. If you are jonesing for a bit more information though, you can find some of that in the description, so do take advantage of it. And a final word of warning to remember that this strategy was traded with demo money. If you are enticed by the results from this strategy to take it live and bet your remaining credit card balance on getting trading gains, then I can't tell you what not to do with your borrowed money. Thank you for watching. This is Project Trade. I am Darth Trader, and there will be more.